Hey everyone, it's Kevin Jones, Life, Mind, and Money. Today we're going to be talking about how to save money and where to save it. As we're all stuck in our home, we're probably not using as much money, which hopefully means that you have more freed up. So for those who are good savers who just want to start, we're going to be talking about where to put your money, because the Federal Reserve has interest rates near zero, and that won't suffice for many of us. So we've got to find good places to put our money to at least hedge against inflation. So let's get started. If you're new to this channel, Life, Mind, and Money is all about personal finance, getting through these times, and making sure your money works for you. So if you haven't done so, please hit that subscribe button below. I certainly would appreciate it. Now, while we're in our homes, frankly, I know for my family, we're just not spending as much money. I mean, think about all the things that we normally would spend money on. Hey, gas, I'm not even using my own car. Or we're not eating out in restaurants. Or think about things we like to do, like travel and entertainment and using a gym. These are all things that we're not currently doing, as hopefully they will come back soon when those restrictions are lifted. But as we start reevaluating our budget, that just means that less money is going out and hopefully similar money is coming in. And what that will do is create a gap for you in your budget for an opportunity for you to save money. Now, for those who haven't really started saving money, maybe this is a great time to start evaluating that. And for others, maybe it's start building on your emergency fund. Maybe you already had one, but now it's time to make it even bigger. So, as we have this chance to kind of reevaluate our budget, we need to find ways to where we can actually save money effectively. And the reason for that is the Federal Reserve brought down interest rates all the way down to nearly zero to combat the situation we're in. The problem is that inflation is still going up. And that means that if we put our money into an account that's literally gaining 0% interest, it won't do anything. And our money will shrink because price of goods and services will continue to go up. And that just won't suffice for any of us. You might as well just throw it in a mattress if that's all you want out of it. Now, don't get me wrong. Saving money in just a simple savings account that's not getting any interest is better than saving nothing at all. I'd rather see you doing that because, as we said, emergency fund right now is probably more important than ever, especially when we have so much uncertainty in our lives, for those of you who have a job and those who even don't have one. But we're going to be looking at options that are out there that are safe, that are making some interest, and will at least provide a hedge against inflation so that money continues to grow just a little bit to keep that money moving. So, smash that like button if you like making money while you're sleeping at night. Now, my first option is what's called a money market account, and they can be offered from a lot of typical banks and credit unions. A money market account acts similar to a savings and a checking account combined. And what it does is it allows you to get a higher interest rate on that savings, which usually sometimes requires a higher deposit amount initially. Also, you have check writing abilities, and some also include a debit card. You'll have to watch for the fees and depending on the deposit amounts of what you need to maintain, or a fee might be incurred if you drop below that level. Now, like a lot of savings accounts, there usually are restrictions by the Federal Reserve that you can only make a transaction up to 6 times in a month. But in recent times, and because of the shutdown, that restriction has been lifted. So you do have more mobility of moving your money around in that account as many times as you want. Naturally, those restrictions will probably go back to 6 once this whole situation has come to an end, but we don't know when that will happen. As you can see on the screen, money market accounts are ranging anywhere from 1.25% to 1.75%, which is way better than a normal savings account, which is probably going to give you 0 or about 0.25%. So this is averaging about 5 to 7 times larger than a normal savings account, which creates a great option for you to park your money. So I highly advise you to circle around the block to see some banks and credit unions where you may want to park your money. Now, a second option for you is what's called a high yield savings account. This is actually just a typical savings account, and it's done at a normal bank or credit union, but the difference here is that they require a higher deposit, and that level must be maintained. This can range anywhere typically from $5,000 to $10,000. But if you do have the money, this could be a great option for you as it acts as a simple savings account and you'll be collecting that higher interest rate. Once again, those Federal Reserve maximums on the amount of usage you can do in there of 6 has been lifted as well. So it is set at unlimited during these times. As you can see on the screen, interest rates can range from 1.3 to 1.7% at the best banks at the moment. And while these interest rates will vary, as you can see, if you have the cash, this is a great place to park your money so that your money continues to grow against inflation, which also can be a great option for you. And you should also be on the lookout, as a lot of high interest savings accounts also have sign-on bonuses that might make this more attractive. So if you do have a larger amount of money to save, that sign-on bonus might push the needle over for you as we go through these options. Now, my third option is an online savings account. Now, you're probably saying, what's the difference between the last ones? But in this situation, these accounts are not maintained by simple banks and credit unions, but by strictly online financial institutions. So you've got to be careful here and make sure that these accounts are protected by the FDIC so you don't get yourself in trouble if they were to collapse. There's a lot of great options out there, and the reason they can charge higher interest rates is because they don't maintain normal brick and mortar stores, and they don't carry the normal overhead costs that a typical bank or credit union does. So that gives them the ability to give you the higher interest rates. So, as you see on the screens, once again, interest rates can go from anywhere from 1.3 to 1.7% depending on where you shop this to. And what's great about these accounts is that many of them do not have minimum balances or very low balances to even get started. And that is why this can be such a great option for you, especially if you just have a few dollars to get started. Just remember, once again, there are no restrictions on how much you move money in and out of these accounts as the Federal Reserve guidelines once again have been lifted for now. So, what I would leave with this is that because there is not normal customer service involved at a brick and mortar store, you may want to start looking at reviews and seeing how the customer response is, whether they have phone numbers or simply by email or some kind of chat feature, as because customer service is going to be dealt just a little bit differently than the other options we provided. Now, the last option I'm going to give you is what's called a CD, or a certificate of deposit. This acts very much like a savings account, but the main difference here is your money is locked up for a period of time, and that's how a bank or credit union is able to give you the higher interest rate. Now, as we talked about having money that is liquid, so that if this is an emergency fund and you need it, this probably isn't the best option for you. So if you were to put money into a CD and then all of a sudden need to withdraw it, I can almost guarantee you that there'll be a fee involved, and that won't help your situation. So if you've got a lot of money to save and it's not something that you need immediately and you already have an emergency fund in place and it's somewhere that you can park money for long term, then a CD could be a great option for you so that that money stays safe and you just don't need to touch it at the moment. Now, CDs can be offered at almost any bank or credit union, and the rates will vary based on the length of time and how much money you're willing to put in. As you can see on the screen, these are some of the better CD rates that are out there right now, and they can range from the lower ones to the higher 1% range. Now, there are other options out there if you're willing to put your money in a very long time, like 5 years, that might push it over the 2% threshold. Once again, this is an option for you if you have money to put aside, but you don't need it now because you don't want to incur that early withdrawal fee. So just keep that in mind when you're shopping these around. So as you can see on the screen, these are the 4 best options that I'm providing to save money and give you some protection against inflation. Now, 1.5%, while it sounds good and it is well above what the Federal Reserve rate is, about 0 to 0.25%, keep this in mind. You're not going to get rich off of this. And it's just somewhere for you to park your money and provide that protection against inflation. And that is it. So while you've built that cushy emergency fund, just let it keep on growing slowly, just so that you have that liquidity and that money when you need it the most. So as we talked about at the top, please take this time to review your budget and think about all the things that you're not spending on money and build that cushion in your budget so you can start saving today or build on the savings you already have. This is a great opportunity for you to really evaluate those things and build that cushion for you. If you haven't done so, once again, please smash that like button, as I appreciate all your help in taking on the YouTube algorithm. Also, leave your comments below. Are there other safe places that you can think of that you can save money and still make the interest rates we're talking about here? And lastly, I love your support, and please hit that subscribe button as we continue to provide information during these shutdown and also how to protect your money and grow your financial future. Thanks for watching, and I'll catch you next time.